You also have a cryptocurrency folder, and people are so concerned about crypto right now and about the prices dropping. So I want to get your thoughts on it because I know it's something that you've put a portion of your assets into.
Yeah. So let's go back to traditional investing. Let's say you're a sovereign wealth fund running $100 billion. That's a small sovereign wealth fund. Here are the rules you'd play by pre-crypto. You'd be no more than 20% in any one sector of the economy. And in our economy, we have 11 sectors, okay? So energy is a sector, so no more than 20% in energy. And then within a sector, no more than 5% in any one stock. That's diversification. That's how it was played. Now, I believe that in the next decade, crypto, blockchain, and all of the productivity that provides will become the 12th sector of the economy. And so there will be many companies that service that 12th sector, but I'm investing according to that kind of metric. I've put 20% of our operating company's portfolio into crypto across 32 different positions.
Wow.
And so I own a lot of different things: Polygon, Helium, Pollen, Solana, Ethereum, Bitcoin, yada, 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 all, and on, not knowing which is going to survive, because I don't know. But if you have enough diversification, you only need one or two to work, and then you're in good shape. And that's the way I think you got to think about crypto. It's just software. These are software developers. There's nothing magical about it. But the reason you should care is that the productivity that it's going to provide. Let's just take, for example, USDC, stablecoin. Yesterday, Circle, the company that issues USDC, closed a deal, first time ever, with Fidelity and BlackRock for $400 million. Those are the most conservative money managers on earth. What are they doing giving $400 million to Circle? Because they figured out that as a payment system, it's far more efficient than transferring between banks, which sucks. It takes days to move money between countries. Sometimes it gets lost. This would all be eradicated with something like USDC pegged to the US dollar. You've got the Senate. You've got Senator Loomis, or you've got Toomey and Haggerty all putting bills forward to support these initiatives. So you got policy coming. I think Fidelity and BlackRock saw the policy, talked to the senators, said, okay, this is going to become legal one day. We want to get ahead of it. And already in stable coins, there's $120 billion right now. And that's before it becomes regulated. So there's a lot of stuff happening here. I'm a big investor. I use Circle. I use the products. Why? Because I can make 4% interest by lending it out with a 30-day note. That makes sense to me. I can't do that in a bank. I'm going to make 40 basis points, and inflation's 6, so I'm losing money putting money in a bank.
Let's talk about inflation a little bit. Real quick, what's a greater risk asset? Cryptocurrency or NFTs?
That's a great question. I would say there's two types of NFTs, okay? NFTs that are tied to physical assets. Let me give you an example. Here's a watch. I'm a huge watch collector, okay? This is an FP Journe. How do I know it's real? How do I know it's not fake? Rolex is knocked off like crazy. How do I know that? That's NAP. How do I know it's real? If that had an NFT associated with it, with the authenticated papers, an image of the box, the serial number, the caliber, and a high-scanned image of the dial, which has tiny imperfections in it, the fingerprint of it, I wouldn't have to get that authenticated if I bought it from you. You just show me the NFT, I'd rescan the watch. Yeah, it's the original watch. Sure, it's going to have some patina on it, but that NFT is extremely valuable because it represents the physical asset. Now, a lazy ape, I don't know.
Yeah.
Right?
Because I see people doing it now with homes now. They're doing NFTs with homes and actual products.
Yeah.
Which seems more sensible than, like you said, a lazy ape.